the biggest AI project on Earth is autonomous driving. And of course, Tesla is in the pole position for that. We were struck that the Chinese government invited Tesla to work with Baidu's Apollo on its autonomous effort. Now, obviously, Baidu has been working on this for quite some time, but clearly it isn't where the Chinese government wants it to be. And so it's invited Tesla in. So Tesla is our largest position, and we think autonomous driving, that entire ecosystem globally, including China, is going to scale from a revenue point of view from really essentially nothing now to $7 to $8 trillion. And when you talk about revenues, just to put that in perspective, global GDP is about $130 trillion. So this is going to move the needle in the next 5 to 10 years. And half of that revenue, 3 to 4 trillion, is going to go to the taxing platforms like Tesla.
Cathie Wood is doubling down on Tesla, the company she previously called the best AI play in the market. In her recent appearance at the Greenwich Economic Forum, she said that it's important to look at each company through the lens of AI development when looking at the market right now, and for Wood, autonomous driving is the world's largest AI project. That's why Wood is so bullish on Tesla. So in today's video, we're going to go over Tesla's massive AI opportunities and also talk about some recent FSD updates that are truly set to change Tesla forever. But before we do that, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Hey, let's talk Tesla real fast, Caroline. We got some China numbers out.
We have quite a few headlines with Tesla. Shares down about 1.2%. Yesterday, we talked about that CNBC report that Tesla was or Elon Musk was exaggerating how much he was spending on NVIDIA chips and also redirecting those NVIDIA chips to X and XAI that were originally reserved for Tesla. He actually confirmed that he did, in fact, do that. In a post on X, Musk said Tesla had no place to send the NVIDIA chips to turn them on, so they would have just sat in a warehouse. So he did clear that up. We were waiting for that. He also said that Tesla's Giga Texas facility was nearly complete, and that will eventually house 50,000 H100s, those NVIDIA chips, for FSD training. He said his current best guess is that Tesla will buy $3 to $4 billion in NVIDIA chips this year. He says NVIDIA hardware is about 2/3 of the cost of building the AI training superclusters. So that was all on X. Just want to get that out of the way. We're, of course, about a week away from the vote on Musk's $56 billion pay package. That could reignite some criticism from shareholders that he's juggling too many companies and not focused enough on Tesla, especially redirecting those chips. But I will say longtime Tesla bull and shareholder Ron Barron wrote an open letter in support of him getting paid. He says he's in favor of the pay package, thinks he earned it, so he deserves it, saying Elon is the ultimate key man of key man risk. Without his relentless drive and uncompromising standards, there would be no Tesla. So a vote of confidence there, not necessarily giving Tesla shares a boost. Two more quick things. Morgan Stanley did reiterate its overweight rating on Tesla heading into that shareholder meeting. Musk recently said he wanted 25% voting control in Tesla to keep his AI projects inside the company. And Adam Jonas said without Elon Musk achieving that 25% voting stake in the company, we believe Tesla shareholders should be prepared for Tesla to significantly slow down and curtail its direct investments in sensitive advanced AI efforts, which I think is notable, seeing as Elon Musk refers to Tesla as an AI and robotics company.
Tesla is now releasing FSD version 12.4 to employees and a limited number of external customers, according to a recent tweet by the company's CEO, Elon Musk. Elon also hinted that future FSD versions are getting so accurate that it's starting to get to the point where, once known bugs are fixed, it will take over a year of driving to get even one intervention. It's very important that Tesla is continuing to develop and release new versions of FSD as it nears its August 8th robotaxi unveiling event. More refinements mean more expectations, and Elon is perfectly aware of this, as he said this new version should arguably be called version 13. Tesla usually changes the base version number when substantial changes are made, and in this case, the base number is 12, so according to Elon's estimates, this new update is extremely more robust than the previous one. This new version also features the highly anticipated removal of the steering wheel nag, which has long been a complaint of many regular FSD users. Instead of using it, the system will now rely more heavily on the cabin camera driver monitoring system to maintain driver attention. Additionally, Elon said that future versions, including 12.5 and 12.6, could eventually be recognized as version 14 and version 15. This would suggest these future versions are getting to a point where they are so accurate that Tesla could really solve FSD in the near future. Now, let's take a look at what the renowned tech analyst, Dan Ives of Wedbush Securities, had to say about Tesla in his most recent note, and he actually brings incredible news for investors. So, don't miss out. Hello everyone, and welcome back to Investocracy.
Time for today's three-stock lunch. With our trades today is Adil Zaman, partner at Wall Street Alliance Group. Great to have you here, Adil. Welcome. And we'll start with Tesla. The board of directors continuing support of Elon Musk's pay package. In fact, Chair Robin Denholm told CNBC it's not about the compensation. Take a listen.
It's not about the dollars. It's actually about someone who took a huge risk from a pay perspective. No compensation would have been awarded had he not hit the milestones. And so for me, that risk reward is very important in corporate America.
And Tesla shares are up about 1% today. Of course, they've been under pressure so far this year. Adil, what's your trade here?
Yeah, it would be a buy, and we would 100% agree with those comments. You know, the stock's down more than 29% year to date. At times like this is when you see buying opportunities in a company like Tesla. And although, you know, their vehicle sales have suffered due to a softening in demand, we see a lot of potential in the self-driving software, which could potentially lead to new revenue streams for the company. You know, potentially it could lead to, when you sell a car, you can only sell it once, but when you get a software, once you've developed it, you can sell it unlimited number of times. And this could potentially lead to recurring subscription revenues for the company as well. So for us, this would be a buy.
Both Elon Musk and Tesla stock investors have a big day coming, as shareholders will vote on Elon's $56 billion compensation package on June 13th. A vote approving the package will end months of turmoil, while a rejection will add more volatility to Tesla stock. But this is something that investors shouldn't really worry about, according to Wedbush Securities' Dan Ives. The analyst expects shareholder approval for the compensation package. So, after the vote, Ives has some ideas about what Elon should do to further calm investors' frayed nerves. Regardless of the final voting control numbers, Ives says that Elon Musk must recommit as CEO of Tesla for the next 3 to 5 years, adding that autonomous driving and FSD are key to Tesla's future, and Elon needs to make this crystal clear at the shareholders' meeting. This is incredibly important, as Tesla's AI potential is probably what's keeping investors interested in the company, despite how terrible 2024 has been for Tesla. In fact, Tesla is one of the leading developers of FSD software. Its latest FSD version 12 remains in beta testing, but customers have used it to complete 300 billion real-world miles, generating valuable data that brings Tesla closer to officially releasing the technology to the wider public. The global autonomous vehicle market is expected to grow at a compound annual growth rate of 32.3% to around $13 trillion by 2030, so Tesla will greatly benefit as long as it delivers on its FSD promises and maintains its position as a market leader when it comes to autonomy. And this will likely be the case, as Tesla is making hefty investments in AI, as we've seen from Elon's recent tweets about the company's plans to buy more NVIDIA AI chips. Additionally, during his company's Q1 earnings call, NVIDIA CEO Jensen Huang said that Tesla expanded its infrastructure capacity to 35,000 of NVIDIA's H100 graphics processing units, So Tesla is actually taking action to become a global AI leader, unlike what many mainstream media outlets would like investors to believe when they say that Tesla's AI strategy is rushed and unclear. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Do you think the best days of Tesla are behind it, Steve?
I think it's too early to throw in the towel on that. Keep in mind, even though Tesla slowed down a bit, at precisely the time the entire global auto industry is moving electric. They just are, and that's because the cost of batteries continue to go down. Tesla still held 52% market share in the United States. That's more than all other competitors combined. So they're in a strong position. They own the dealership. They've got a cost advantage on batteries, but they've got to kick things into a higher gear. That all starts with fixing full self-driving, getting that $25,000 car into the market.
Tesla stock is down about 28% year to date, and for more reason than the drama surrounding Elon's pay package. Slowing sales and lower earnings estimates have weighed on investor sentiment. Tesla delivered about 387,000 vehicles in the first quarter, down almost 9% year over year. Partly as a result of lower deliveries, Wall Street expects Tesla to earn about $2.40 a share in 2024, according to FactSet. At the start of the year, that number was closer to $3.80. Dan Ives, for his part, has a buy rating on Tesla with a $275 per share price target. Overall, about 42% of analysts covering Tesla stock think that it's a buy. So, that is what analysts think, but what should retail investors do with their Tesla shares? In my opinion, we can't deny that Tesla is going through some headwinds, but they're probably just short-term ones. When you think about the longer-term context for Tesla, with new technologies and products like FSD and robotaxis, you'd see that the stock actually trades at reasonable levels right now, so the current dip is definitely a buying opportunity for investors who believe in Tesla and Elon's vision for the company. And that is for Tesla to be way more than a car company, but an AI and robotics company that will become a leading player in these two sectors. I mean, Elon said it himself, if you don't think that Tesla can solve autonomy and reach its AI goals, then you probably shouldn't invest in the company. But what do you think about Tesla stock? Is it a buy at its current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.